Hello everyone and welcome to ICM's midday session. We're still having the same momentum that was started on Thursday and Friday. The dollar is strengthening across the board, and some gold was suffering during the Asian session, but now we're just a bit recovering into Friday's levels. So starting with the euro dollar, we're trading below 122 for the first time in almost 2 weeks. What could be the possible good zones, good levels? 121, 120, 121, 120, 120 is it's a possible support area, since previously it was a good area to just buy the dip in the euro dollar. So this could be the first niche support for the euro dollar, while the next coming support could be coming at 120.60, 120.40. These are the possible support for the euro dollar. While we need to move back above at least 122.10 in order to turn bullish again. You can just draw a trend line combining the previous tops and bottoms to just highlight where the market could be going. So what you can do is just draw this trend line combining these, and you can draw just a parallel straight line, and you can see that the market usually so similar to what we do usually is just trading inside this channel. So watch out for any break below this channel, which is currently coinciding with the previous support zone that we just talked about. The British pound against the United States dollar also fell below key support that was holding last week around 135.30. So we need definitely to move back above it in order to just turn bullish again and retest possible highs near 136. As long as we're below, we could be just targeting the parallel line to this trend line to form this possible channel here, which is somewhere near almost 134.60. Possible next possible support zone is near 134.30, 134.10. The US dollar is strengthening also strongly against the Japanese yen, so it's just very clear this upside move that we're having. You can just draw this trend line that we drew earlier, combining the previous stops in order to just check where the market could be going, and it's coinciding with the 100-day exponential moving average. If we just go back to the hourly chart, you can just detect the previous stops. We had previously a range that we were trading in between 103.70 and 104.75. So this could be the next possible level above or near the downtrend line that we are just witnessing. Also, moving back below 1,360 could just turn bearish again for the dollar against the Japanese yen. So this is the possible zone that we could be trading in for a while. The US dollar against the Swiss franc also finally a push higher towards the 200 H4 exponential moving average. Also on the H1, if you can just draw the trend line that we drew last week, combining these previous stops, you can see that we're currently trading at this key area. So watch out for a possible break here, and the close above it could just lead to a retest to the previous zone, 89.20, 89.40, which was previously a key area. If we were able to push higher, 0.9 is just a key level for sellers. However, we need to stay above 88.20 in order to remain bullish. As long as we are above it, it could be we could be heading for another bullish scenario. If we just turn around again and drop below 88.20, we could be retesting the bottom again. You can also do similarly to what we just drew for the euro dollar. You can just draw a trend line combining these previous bottoms. So watch out for any violation to this trend line. The Australian dollar against the United States dollar, clear move to the upside. You can just monitor the break of this trend line. So as long as we're below it, we could be poised to further downside. A key possible support is 76.40, previous top and previous bottom. So this is just a remarkable level. Watch out for the move towards it. However, if we move back above 77.40, trade back above this trend line, could just turn bullish again on the pair. The New Zealand dollar against the United States dollar, almost similar formation to what we just saw on the Australian dollar. So you can just draw a trend line combining these previous bottoms. Watch out for a possible dip towards 71.60, 71.50, while a reverse and a move back above 72.40 is just bullish again for the New Zealand dollar. The US dollar against Canadian dollar, also similar formation. We were able to break above the trend line that held for 2 weeks almost, and as long as we're above it, we could just be poised to further upside. Definitely 128.40 is a key area. Previously it was support and resistance, so watch out for the possible price action here. We could be just targeting this level. If we're able to breach above it, 129.50 as a possible target on the long run. As long as we're above 126.85, this scenario could be valid. Gold prices had a sharp dip yesterday, falling to previous low near 1818. You can see this area here was a key area before breaking higher. We had this false head and shoulder formation previously. This was almost the neckline where the markets bounced from towards 1960. So during the Asian session, prices fell towards 1880. Now we're just stuck in a key area between 1818 and 1855. So this area is just key for the coming days. Moving back above 1860 could just trigger further upside towards 1900. Silver, similar formation. So we had this this sharp drop, and then the market moved higher again, just recovering partial losses. If you could just go on the bigger picture for just having a slight problem. So moving to silver, where we're still trading. So if you can just go to the H4 chart, you can see that this drop is just stuck in the middle of a sideways trading. There is nothing clear for where we currently standing. We need to push back higher above 26 to turn bullish again for silver. As long as we're below the 100 and 200 H4 exponential moving average, we could be poised for further downside on silver. Possible next support area could be near 2365 during this week. However, as long as we're above 25, we could be just tilted a bit to another push to the upside. The WTI, so following this push to almost 52.65, we had a bit of a reversal. However, it's still solid and strong. We need to move back below 50 zone in order to just turn bearish. The first interim support would be at 51.30 ahead of the 50 level. In order to push higher, definitely we can just highlight the 52.70 level. A break above could just lead to another push higher towards the $54 per barrel. However, watch out for a break here below 51.30. Any dip back below the 50 zone could just trigger a bigger correction towards this trend line, combining these previous bottoms. The Dow Jones, last week we highlighted possible channel and the sideways trading that was happening. So this was the actual setup on Friday, and then the market did break lower towards the 100-hour exponential moving average, and then retraced towards the bottom of the channel, and then settled slightly higher here. So what we can just do is just highlight the bottom, which was a previous top, 30,800. Any break back below 30,800 could just trigger a bigger move lower. We could be just forming a reversal formation here, where a target near 30,400 could be possible. So this could be the possible next target if we're able to break back below 30,080. If we continue to hold here and we're going to push to the upside another time, moving back above 31,150 is just crucial, and we could be moving back towards 31,400 as initial target. So this is all for today's session. I'd just like to remind you that all the information, news, analysis, and opinion mentioned in this session, they're only for educational purposes and shouldn't be taken as a signal whether to buy or to sell any financial instrument, and ICM doesn't provide any investment advice. This is all for now. Thank you all for joining.